afternoon, and welcome to Jones & Company. I'm your host, Brian Jones. And today we'll be talking about a very interesting component of our capital market system, crowdfunding, and financing of small businesses and associations, etc. And on our guest today is none other than Mr. Darcy Rhaming. He is co-founder and chief technology officer at ArrowActX, which is recently licensed and operating exchange. It's an international exchange.
Yes, it is.
And
yes,
it's
it is.
a crowdfunding platform as well. So we're going to dive into all of that. But before we do, let me just ask you, how did you even end up in this line of work to begin with?
Well, thank you for having me on the show. And I think your guests are going to be really, really excited for what we got to talk about today. So how did I get into this? So I'm an engineer by training. Mm-hmm. And, you know, I came back home 2012. And frankly, the economy was a mess. The place was a mess. You know, my father's and his friends were all business owners, and almost all of their businesses failed. Mm-hmm. And, you know, you could say, you know, business is risky. You could say something is, one business person might fail just because of the market changes, et cetera. Two might fail, three might, but when all, it tells you that there was something, you know, not right. Systemically, right? Mm-hmm. And so, I'm there. I'm working with Dad. We're working in the public side of us is sport, mm-hmm. judo, working with the community, and then privately we were working as management consultants. So working with business owners, mm-hmm. Getting their businesses structured, trying to figure out how to increase sales, figure out how to structure them for financing, and then. By the way, short aside, if you talk to both the business owners and the people in the community, everybody's worried about the future. Mm-hmm. And so it's crazy that the people that are supposedly at the top of the food chain, the people at the bottom of the food chain are worried about the same things. Right. Where are we going? Right. And so in 2017, the Securities Commission of the Bahamas went out to industry and said, we got this thing called crowdfunding, we're going to put these rules out, and who wants to do this? Mm-hmm. And me and Dad, my dad has his MBA, he's also an engineer, MBA in finance. And so me and Dad were looking at each other and we're like, we could do this. You know, this has combines our love of technology, of business, of finance, a whole lot of economics. And then of course, getting the community involved in building businesses. Mm-hmm. And so little did we know it would take, since 2017 is now 5 years, and spend the family fortune on it. So, you know, but it's up, it's operational. We've had a success, and we're learning every day by day. We're definitely not perfect, but we're not trying to be perfect. We're just trying to be in communication with our community of investors and businesses, and trying to find a way to add value and do it more efficiently moving forward.
Fantastic. Mm-hmm. So basically, well, I guess a lot of businesses out there, especially the ones that are successful, mm-hmm. they enter into whatever line of business they choose to solve a problem. Yes. Right? And that's basically what you said. There was a problem you noticed, and basically a systemic one, as a matter of mm-hmm. fact, and you sought to address it. Well, so what do you do, you know, to basically get to the point where you can address it?
Well, so first of all, like all business, you need to look at the market, the size mm-hmm. of the market. So the IDB did a study, and there is a funding gap that exists within our society mm-hmm. For business funding of about $800 million a year. Mm-hmm. Yeah. Okay. So it's a huge problem that financial institutions can solve. Only financial institutions can solve that. That's pretty much the size of a government budget, Treasury. They would have to double taxes, and it would still not be enough. So obviously that's not a solution. It has to be a free market solution. It has to be financial institutions. And so when you start to look at what it is that can, because all we are as a financial intermediary is we help move money from unproductive areas of the society to productive areas. And the productive areas in society are businesses, the people who are actually solving the problems that exist in the society. And so that's all we do. We're just a link, a safe way to link these group of investors with these groups of businesses, and there's a meaningful way that, in a meaningful way that is, keeps track of who people are, keeps track of people's rights, make sure that it's done in open and transparent manner, and so that's it.
Gotcha.
I mean, I make it sound easy, but it's not. It's not easy. There's a lot of technology involved in that too.
Right. Also, I'm sure a lot of nuances will come out through our discussion here. So, as when it comes to now engaging the crowd, right, to raise capital for companies, what is your approach to doing that as a company?
So, for us, so every business. So we like to think of these businesses as these big buildings that have no faces on them, and no, these are these black boxes, right? There's business. The people who run these things are evil, and the people who work for them, they're good. And there's this. They set up this dynamic. There's the us versus them.
Right.
But that's not what really businesses are. Businesses are communities. So there's the people who work for the business. That's part of the community. That's management and line staff. They're the owners of the business. Those are your shareholders. Then they're the customers who, without the customers, the business doesn't work, right? Somebody has to pay the bills. And so it's understanding those various different types of relationships. You can have a meaningful and honest discussion with those various types of members of the community about how do we get this business, how do you get more involved? And what crowdfunding does is it allows the customer and the employees and the people that are part of the periphery of the community to have an ownership stake. And what ends up happening, as you know, when people own something, they're going to patronize it more, they're going to take care of it, they're going to recommend their friends to it, they're going to do a lot of things because it's theirs.
Right.
And so that's what crowdfunding kind of does. It kind of inverts that. If you think of it a pyramid, you kind of invert the pyramid where the crowd now can participate at the ownership level, and it's a really cool and novel concept.
So how would you say crowdfunding differs from traditional public market investing, right? Listed stocks and bonds and so on, what people are used to?
It in many ways it's the same thing,
just
happening over the internet. Now the only difference is they're in traditional finance. There are these funds that kind of pool money and then they direct it. Whereas the internet allows you to kind of go direct to market.
Right.
And so that's kind of what is there. It's not going to ever replace a fund. Funds are very, very important. They will always need people to pool. But you also need other avenues to invest. So you need both in a properly functioning financial ecosystem. And so what we recognize is it didn't exist. So we, like I said, 4 years, and most of that was regulatory work. So I'm actually 2 months away from being a lawyer now. So I had to go back to law school. That's how much rules and regulation that I deal with on a day-to-day. I had to get to understand it, right? But yeah, so it's coming back to your question. It's about engaging the community.
Yes.
In a way that wasn't possible because traditional finance was, let's be honest, it's an old boys network.
Yes.
You didn't go to the right school, you didn't come from the right family, well, good luck.
Right.
So what we're doing is we're helping to democratize that a little bit.
Yes, absolutely. Well, I mean, this is part of a global trend anyway, right? In terms of democratization and distribution of wealth and opportunities, right? This is, I see, across the board from the U.S. Through Europe and even in Africa.
And I know you're a blockchain expert. So these are a lot of these. That's what I think makes digital assets so appealing to people. Is that democratization, is the fact that, like in the past, the access to certain types of assets was very, very limited. You had to, it was very difficult, let's be honest. Even now, it's still very difficult for people to build assets. I believe in something called the property owning democracy, which is, we got the democracy part down, but it basically means society should be set up for people to own and acquire assets. Three types. Everybody should be able to have their own home. People should make enough money so that they can have cash savings. And the last is investments. People should have easy access to investments of all kinds. And so, we help, Arawak X helps with the investment side, but, as a society, we should be encouraging those kinds of behaviors because it makes for nice, beautiful, stable society. I'm a millennial, you're a millennial. Many of us in our generation don't have their own homes. Some millennials are about to be 40. These are not children. I'm not a child. We're not children. So it's only through institutions, financial institutions that are working with government, working with business community, that you can kind of bring all the pieces together.
Yeah, so let's talk about that a bit. So how do you work with a company? Let's just say that there's a, maybe, I guess, a startup, right? A current startup. They've just recently incorporated, they have their business plan, and they need some capital, and they come knocking on your door. What happens next?
So we wouldn't deal with them at that level. We would deal with them when they have some traction.
Some traction. So what does some traction mean?
Some traction could be either $100,000 in sales, which sounds like a lot of money. For a person, 100 grand is a lot of money. For business, 100 grand is not a lot of money because you're dealing with multiple people. So it's important to keep that in mind. So some traction, either 100 grand in sales, some contracts that need money to be realized, something that says this is viable, this is a viable business. And so when they have that and they have their plan, we start to look at their team. We have this acronym that we use, a team that delivers magic. The team stands for the executive advisors and management. Who's running this thing? You could have the best idea in the world, but for example, I can think of all kinds of nice agricultural green things. I can't grow anything, it'll die. So do not put me in charge of an agricultural business. I will fail at it. Just because, so I'm saying that as an analogy, that you need to have people there that have either done it before, have trained to do it. You need to really look at the people that are running this thing.
Absolutely.
So that's the team part. Magic is simple. A market. Is market big enough? Simple business. Access to that market. No sense saying I want to sell to the Chinese. You can't get in front of the Chinese. You have to have access to them. G, growth. You have to be looking to grow your business, at least to be able to do returns of 15%, because it is riskier. So obviously returns have to be greater, right? I is innovation. Something innovative. And the reason we pick something innovative, and innovation can be anything, a business process, a new way of selling something. In fashion, it could be a color on the bottom of your shoe, right? And so something innovative because it allows the business person to tell their story. So this is almost crowdfunding and public markets, public companies is about telling your story and getting enough people in your community to believe in your story, to buy in, right?
Exactly, yes.
And so you have to have something about your story that is interesting to tell. If you just say, I'm going to, open this business and I'm going to do lower prices than the next guy, I guess that's kind of interesting, but it doesn't really grab your attention. By the way, you should never compete on price. But anyway, so that's the I. C. That's the corporate governance. That's that stuff that finance people spend all day making sure is right, because it is important. It's very, very important.
Indeed.
But you could have all the corporate governance, and if you don't have any of that other stuff, the business still fails.
That's right. It's the linchpin in the organization.
Yeah.
Absolutely. That's what ties in with the management perspective as well that you said, right? Which, if you have poor senior management, that's a killer risk to your business. Completely. A non-starter. But if you have stellar management, it's a lot they can do, right?
Yeah. In fact, there are good management teams running terrible businesses that are still working.
As a result.
Yeah, some of these businesses, especially if you have the right team, you can sit in a dying business for a long time, a really long time with the right team. So it really is the people, but everything else is important too. You can't discount not having any of them. So,
Right. So let's just say this entrepreneur, they tick all the boxes, right? They come through,
Yep.
and they're able to demonstrate that they have team magic.
Yep.
Then what?
So then they come to us. We kind of syndicate them out a little bit,
Okay.
and then they go to the crowd.
Yes.
And then when they go to the crowd, you will see they get to tell their story to.
But let me just ask you to articulate, what does it mean to say syndicated out before you go to the crowd?
So
Yeah.
the bigger funds and houses, they want things that the crowd don't want. For example, they want a board seat or the ability to negotiate other things, other terms.
Right.
And so it's important that you allow them, especially if they're going to be putting in 20-30% of the raise, the space to be able to have those negotiations.
Right. Right.
Yeah.
Okay. So you basically get a bedrock of anchor investors.
Yeah, they call
table.
it testing the waters in the U.S. You got to make
Yes.
sure that people are, there's no sense putting it out to the crowd and for it to fail, right?
Right. Right.
So that's kind of what we were working on.
Right.
It's taking time. That's why you see us up and all over in New York and these other places, because these relationships take time to build.
Right.
And then
right.
they take time to move, but once you get them moving, then you have a consistent pipeline.
Understood. So speaking of, pipeline, before we look at like what's on the horizon, what have you, can you speak to us a little bit about your prior offerings, right? Because you've been making some headlines, and a lot of people are excited about the products you've already brought to market. So
Yes.
let's just kind of review essentially where you've come from and where you're going.
So we've had one success so far, which is the Red Lobster. I think that was successful because people really understand that product. They really understood the management team. They've done similar type businesses before.
Yes.
And so it kind of, like I said, ticked all that boxes. The other products, a lot more innovative. They were not successful. And so what we did was we made some pivots.
Okay.
But in the future, we have 12 companies that are about to launch, and we are taking them through that syndication and then
Right.
that process.
Okay.
Yeah.
Right. And so so you have a pretty healthy pipeline of companies coming up.
We have hundreds of companies come all the time. In fact, as part of that syndication process, right now we have $8 million of eyeballs kind of looking at stuff.
Okay.
So it's growing every day. So
Right.
we are, we're working it.
So this group that's looking at possible syndication, where are they based? Are they international?
They're all over the place.
All
They're all
over.
over the place. Yeah.
Right.
Local, international,
Right.
some of the major pension funds of the companies around here.
Right.
All kinds of different investors.
That's interesting. So you're basically attracting a hybrid allocation, essentially, of capital from international and domestic, institutional and retail.
Yeah.
So it's a
because
good
at the end
mix.
of the day, so people think of it as, this is how I think of it, right? Of course, there are rules. The rules are what we're following, from the securities industry's rules. But what it's about is about mobilizing, for us, the communities of investors that exist out there.
Sure.
I keep talking about community. This is our business now. We have to find a way to add value to the community of investors and add value to the community of businesses. Because at the end of the day, it's the businesses that are the job creators in our society. We have to get them funded, because what they do with that investment is they take that investment and they put it to work, which means they hire people. They got to buy supplies. They got to go do, so money starts to move around the society. If you do not get these businesses funded, we end up exactly where we are.
Right.
Now we're coming out of the pandemic, which was a huge economic shock.
Yes.
But what are we returning to? We're returning to that post-2008 financial crisis state. I mean, look around you. I mean, I don't know if you've noticed, but when you look at most people's cars, most people haven't upgraded their cars in a long time. Bahamians love their cars. They love. I mean, so if there was extra money in their town, they would get it.
Yes, you're right. You're right. As a matter of fact, basically the only source of capital is savings, right? And we know our savings rate is extremely low, and COVID has taken a toll on all of our pockets as a result.
Yeah.
And so, we're gonna revisit this idea and discuss how RWAC Acts can help with our economic recovery when we come back from this break. This first segment of Jones & Company was brought to you by RWAC Acts and Agio Digital. Thank you for joining us, and we'll be right back.